Hello investors, I'm Stuart Kruse and welcome to KAM's Trading Tuesday, where we trade some of our quantitative value portfolios or some of our quant portfolios. Today we're trading our QVP, which is our quant value portfolio. This is where we take fundamental characteristics of stocks that have tended to lead towards outperformance and buy stocks with those characteristics today. But before we get to that, let's take a look at one of our Trading Tuesday segments a month ago. November 3rd, we recommended buying Albemarle. So I'm going to put up on the chart right now. You have the S&P 500 up here in that last 30 days or so is up 5.69%. I think we recommended it on the 3rd, so that's Trading Tuesday. Let's go with up 10.1%. And I said, if you didn't want to buy Tesla, you want to perhaps buy lithium producers. So Tesla in that time is up a whopping 52% in a month. That's right. So from its elevated levels, it's up 52%. And I said, if you wanted to buy something that was a little bit less volatile, a little bit maybe more stable, that could participate from all of the electric car vehicle producers, maybe you buy Albemarle, which is a lithium producer, and they are up 46% year since that time. So that looks like a pretty reasonable suggestion as opposed to buying the more radical Tesla. Not that Tesla's radical, but I think the reason why is I wanted to show you the PE ratios. And if we look at PE ratios on the panel by itself, so the PE ratios of Tesla, 1,200, almost 1,300, and Albemarle is under 40. So I think there's probably a little bit more room to run there. Tesla's obviously got a lot of earnings that they've got to grow into in order to justify this kind of lofty levels, but Albemarle is at a kind of a reasonable number. So let's move on from there and let's talk about the trades that we're going to make for our QVP. So switching gears right now, what we have up here are two cells. Here I have the S&P 500 in purple. We have Broadridge Financial Solutions and United Parcels. Both of those have outperformed year to date. United Parcels up 42% year to date, and Broadridge Financial is up 19%, so outperforming the S&P 500 by about 4 or 5%. And again, I'm going to look at the PE ratios just to give you an understanding of where we're at. So Broadridge Financial PE is trading around 36 and United Parcel trading at 31. And these things have risen and elevated over a period of time. So back since that March returns, or even United Parcel is up considerably off of its normal PE ratios, right? So we think it's time to sell. Not we, the numbers suggest that it's time to sell these two positions. And this Broadridge Financial is a financial play with a PE of 36. We're going to swap that out for another financial company. And let's make that switch here. We've got the spiders again. We have Manulife Financial and Tyson Foods. So again, if we look at these two buys, they have both underperformed the S&P. So it's a value portfolio. We're looking for contrary plays. We're looking for plays that have underperformed, that are looking to rally in the next phase of the market. So here we have Manulife Financial that's significantly underperformed by about 20%, and Tyson Foods has underperformed by about 40%. And if we, again, looked at PE ratios of these two companies, so instead of being up in the 30s like they were before, we're down in the average of 10 range. So Manulife Financial is below 10 and Tyson Foods is at 11. So typically as a value portfolio, we're looking to buy a dollar of earnings at a lot less costly level. We're looking to buy opportunities where you have more upside, and that's kind of the value play. All right, so here we have it, Trading Tuesdays. This is Stuart Kruse with Kruse Asset Management, trying to help you to live the life of the odds in your favor.